Hello guys, Steven Ducks here. Welcome to this video. So today, let's go over some of the GapHub short, not the bounce short. Most recent GapHub short, I would say the statistics has not changed yet. So I'm gonna go over some of the psychologies of the short sellers and the buyers as well for the recent month. I think it's going to be really helpful going into playing all these patterns in the next half of the year. Other than that, let's get into the video. So the first one that we have is VICG. Let's compare with the GapHub percentages first. The most recent three GapHub short we have is IPX, MMV, and VICG. Now let's talk about the first thing that we want to focus is it has to meet the qualifications of GapHub short. So market cap and flow. First one we have is initial market cap is under 100 million. I believe the flow is around 3 million to 5 million on MMV. The other one we have is IPX. This one is also an IPO. No histories on the chart. MMV also an IPO, but it did have a history on the chart. It faded all the way down. Now let's keep all of that in mind. We'll have VICG. It's not the first time it has run yet, but it has run before. So the only clean chart we have is IPX compared to VICG and MMV, and those are the differences, and they have very similar market caps and float. Now let's get into the intraday. So the first one we have is MMV. It gapped up about, I would say, 250%. Pushed exactly about 30%. It had its weird up and down consolidations. Once it cracked, it has lost its momentum. It went all the way down, faded about 75% from the top, starting from 4 all the way to 2. So the total range is about 75%, I believe. Let's take a look at it. The total fading percentage is starting from 4. So let's put a mark right there. Range started around, I would say, when it's put it 1, 75%. Yep, exactly 75% on the first GapHub short. And it bounced in the second day, then opened, it faded again. So going to the second day, I don't think it's really worth it to short around 2.4 since it hasn't bounced enough. Typically, you want to wait until at least goes around 3 before shorting into consolidations by using the resistance that formed from yesterday. Then we have VICG. This one ran before, so let's take a look at the intraday chart. The first one we had is starting from 2.6, opened around 3.8. So the total spiking percentage is about 70% from yesterday. Remember, MMV opened above 200%. VICG opened around 70%. So that doesn't fit our qualifications of GapHub short. And once you see the consolidation that was formed, the difference between VICG and MMV, this one actually cracked, with this one squeezed up another 200-300%. All the way from the bottom, squeezed all the way to 11, went from 300% from the bottom. And this one doesn't really have any resistance. Let's take a look at the May 2nd resistance that was formed before. Doesn't have any type of consolidations, so not typically when you see a ticker that ran before doesn't have any consolidations, you cannot use this one as a resistance candle. Also, the volume is overwhelming, so this one has to be a fresh chart, no actual very solid resistance. One thing you want to pay attention is if the stock opens less than 100%, I would say 75%, then the range is really tight. Shorting into the morning push is not going to be very ideal. You can see this one pushed all the way up. So shorting into consolidations is going to be very difficult. Trading these type of pattern with really tight range on the GapHub short. So at GapHub short criteria, it has to be the open price compared to yesterday's close has to be at least 100%. So on VICG, those are the difference between MMV and VICG. Now going into IPX, so we look at the difference between MMV and VICG. Both of MMV and VICG ran before. It's not the first time they ran, and IPX is a completely fresh chart. So let's take a look at IPX, which will be June 13th. First one we take a look at, well, on the flow and market cap is it does qualify the criteria, initial market cap under 100 million. Now going into how it opened, so started around 6, opened at 9. So this one did not open 100% above yesterday's close. So you want it to open that correctly, it has to open around 12. It didn't, opened around 9. So this one does not fit the typical GapHub short, and you can see it squeezed all the way up again, starting around 9, went all the way to 18. So this one doubled from the bottom. VICG tripled from the bottom. And you can see if the chart doesn't have a history of its dropping 90% from the top, this one dropped 90% from the top. IPX, if it's on the fresh chart, you can see this one didn't really drop. Well, there's two things we can take from most recent gappers. First one is tight range at the open compared to yesterday's close. If that does happen, always be patient, wait for consolidations. If the stock doesn't have a history of dropping 90% from the top or didn't trade any type of volume before, no range was created, it was pretty much a flat chart, then I would avoid the first green day. You can see majority of them, they consolidate and they don't drop. That holding overnight, it's pretty much a gamble. Either it gaps up or gaps down. I wouldn't want to hold overnight on these type of face chart. Now going into the tickers that has tight gap up range, uncrowded volume, avoid those as much as possible. I would always avoid on the first green day because once they form consolidations, it's hard to know they're actually going to perform momentum shift. Even though it performs momentum shift and it cracks down, you still don't want to hold it overnight because first of all, it didn't fade 50% from the top. This one only faded about 40% and closed, I would say, pretty strong. Always a gamble that this one could gap up in the second day because that type of consolidation breakdown does not indicate the momentum is going to shift. Typically uncrowded volume with consolidation breakdown, there is about 50-50 chance. If it doesn't lose 50% from the top, it can perform either gap up or gap down. It really depends on how much volume traded on the current day. For MMV, if the stock performs a large amount of range after market open, as long as it's not a biotech, I think it's doable after the stock pushes and consolidates. Then it's okay to aim for momentum shift. So always pay attention to how much range that stock has created. Always pay attention to the volume. If the stock trades over 10 million shares in the pre-market, be very careful because majority of the time you're running into a first green day than a gap up short. So majority of the time that you will get squeezed on the first green day. That will be all of the gap up short or gappers in the last couple weeks, and hopefully you guys learned something. And if you have any questions, leave a comment below. Make sure to click the like button and subscribe. I will see you guys in the next one.